When people are worried about a recession, they tend to look at the general recession indicators. Things like the Buffett indicator about a potential market crash, or things like the yield curve indicator about a potential recession. But there's one recession indicator that's flashing red warning signs right now that most people are overlooking: consumer spending. But not just any consumer spending, it's select consumer spending, meaning where are people spending their money? For example, when people are worried about money, they're worried about an economic slowdown, or they're lacking money, what do? They shop at discount retailers, places like Walmart, that way they can save more money. And when people feel good about their money and the economy is booming and they feel wealthier, what do? They want to upgrade their kitchens. So they go to Home Depot, that way they can buy appliances and buy things, that way they can upgrade their homes. And just recently, Walmart and Home Depot released their earnings statements, they released their economic outlooks, and what they think is going on in the economy right now that most people aren't really talking about. Walmart says that, well, business is booming because people are shopping at Walmart. And Home Depot, well, they saw their biggest quarterly drop in revenue in, get this, 21 years. The best way now for you to understand what's happening with consumer spending in Walmart and Home Depot is really to go back in time a little bit and see what's happened in the past, because while history might not exactly repeat itself, it does rhyme. So if we go back to 2008, when the 2008 crash happened, Walmart boomed during that time. Let me read you a little excerpt from what happened then. Walmart didn't just survive the 2008 recession, its store sales skyrocketed. From the start of the financial crisis in 2008 to the end in late 2009, shares of Walmart rallied by more than 12%. That meant Walmart did good in the recession. Why did they do good in the recession? Because when people were struggling with money, when people were losing their jobs, they didn't want to go out to the fancy and expensive stores to go and buy things. They went to discount stores like Walmart. So when you see that type of economic slowdown, when you see people worried about their money, what do? Well, they go to the discount stores like Walmart. Now what are we seeing happen today? Well, Walmart is seeing a lot of money starting to come back into the stores. Let me read you a few sentences from their latest earnings report about what they said is going on at Walmart. This is from the first line of the Yahoo Finance article, and I'm also going to link this for you down in the description. But what it said is, when the economy slows and inflation is high, it's often Walmart's time to shine. And we know that. We saw that happen in 2008. We've seen this happen time and time again, where people are worried about money, they go to the discount stores, and, well, Walmart is shining right now. According to their CEO, Walmart CEO, where is the biggest growth that Walmart is seeing recently? Groceries and essentials. Here's what the CEO of Walmart said. He said, "It's a great time to be a merchant. We continue to gain market share in the grocery category, including with higher income and younger shoppers, and we saw good growth in membership income in both businesses." Did you notice what he said there? That they're seeing growth in the grocery side of their business with higher income and non-higher income shoppers, meaning people who either make a good income or maybe making a little bit less money are going to Walmart to get their groceries. They're spending more money on their groceries. What does that mean? Well, maybe they're looking for ways to save money. Why are people looking for ways to save money? Obviously, we've been seeing high inflation, but that could also mean that people are naturally worried about what's going on with the economy and a potential recession. Now, by the way, if you are seeing this different background, I am traveling right now, which is why I got this different background, so I appreciate you bearing with me. But let's compare what's going on with Walmart with what's going on at Home Depot. Now, we know that Home Depot benefits when the economy is booming and when people have more money. Because when people have more money, they want to do home renovations. They want to do fix and flips. They want to spend money on their home because now you can go out and get a home equity line of credit, you can do a refinance, and you can spend that money on your home. And when you see a slowdown in the economy, well, the opposite happens. People don't spend money at Home Depot. So just like what we did with Walmart, let's go back in time to see what happened during the 2008 crash with Home Depot. Now, a little disclaimer here. During the 2008 crash, that was obviously the real estate crash. So Home Depot was disproportionately hit hard because the entire real estate market was decimated. But let's take a look at what happened to Home Depot then. This is an excerpt that says Home Depot's earnings each declined by 40% or more from 2006 to 2010. Home Depot suspended raising its dividend for 3 years during the worst of the crisis, and the stock fell by as much as 50% during the Great Recession. So this confirms what we were just talking about. When you see an economic slowdown, people don't want to spend that money in their homes. They want to save that money, and they don't shop at Home Depot. That's what we saw happen in 2008. Now, what are we seeing happen now? With CNBC, the title is Home Depot posts the worst revenue miss in about 20 years, and they lowered their forecast as customers delay big projects. Well, let's dive a little bit deeper because headlines don't always give us the full picture. So let's see what's going on with Home Depot. And let me start by talking about what their chief financial officer said. What he said is that customers are buying fewer big ticket items such as patio sets and grills, and they're taking on smaller home improvement projects. But then what was interesting is the CFO talked about how Home Depot predicted an economic slowdown to happen, which is kind of not that surprising considering the big run up and boom that we saw in 2020, 2021, and even into 2022. Now with higher interest rates, what they said is that they expected to see some sort of pullback with spending, but it wasn't as much as what they thought. Here's what he said. He said the pullback was expected, but larger than expected because of higher mortgage rates and people spending more on services. Essentially, yeah, Home Depot expected a slowdown in spending, but not this much of a slowdown. But this is where things get even more interesting with Home Depot, because he then went on to say that they believe that this slowdown because of the higher mortgage rates is just temporary, and they expect their sales to pick up very quickly. Let me read you exactly what he said. By the way, we covered this entire story in Market Briefs, my free financial newsletter. If you haven't joined Market Briefs yet, it's a free and easy way for you to stay up to date with what's happening in the financial markets. It's a free email where my team sends you a breakdown of what's happening in things like the housing market, the stock market, crypto, the global economy, and even our own economy into a fun, witty, and easy to read email. You can read it in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet, I got the link to how you can join down in the description below. Now let me go to his quote. What he said is that the state of the homeowner is that they're very healthy. They have healthy balance sheets, they have healthy incomes, but I do think that there's a shift happening, even if it's temporary, from larger projects into smaller ones. So essentially what the CFO is saying, yeah, we're seeing the slowdown, and from the customers that they're talking to, it might just be a temporary shift where people are changing this idea from doing big projects to smaller projects. That way they can save a little bit of money, but they expect things to come back soon. How long is temporary? Well, no one really knows, because even when inflation was transitory, well, that never really happened. So now the question is, what do these two things mean? Because what we're seeing is more and more people, whether they're higher income earners or less income earners, are shopping at places like Walmart to save money on groceries. And at the same time, we're seeing people pull back from spending money on things like home improvements. The question is, what is the cause and how long is it going to stay? Now, the cause is kind of the easy part. Inflation has been around for a long time. That's starting to catch up with people. Inflation is the reason why things are becoming more and more expensive. It's causing the price of things to go up because the value of the dollar is going down. That's the inflationary side, and that means people have less money to spend in other places. That has been happening. Now, the impacts of inflation on the economy is that this higher prices of things are causing a slowdown in the economy, because our economy, again, runs on spending. When you have more money to spend at Home Depot benefits. They can open more stores, they can do more things and hire more people. When Home Depot is now making money, they cannot expand, and they might have to let people go. So when people spend more, businesses grow, more people have jobs, income goes up. If people are not spending, it's the opposite. If you're not spending at Home Depot, they can't hire more people, they might have to lay people off, and now you have less jobs and lower incomes. And so the higher inflation has caused slowdowns in spending, because now people have to spend more money, not to get more things, but to get the things that they wanted, to get a smaller amount of things. So higher inflation is causing a slowdown in spending, which is hurting the economy. The second thing now is the Federal Reserve Bank raising interest rates. The higher interest rates that we're seeing now are putting a deep slowdown in the economy. And this isn't just in the banking sector, this is across the board. Now, housing is one of the most sensitive sectors to higher interest rates, because when you go out to buy a home, your mortgage rate is what determines how expensive your monthly payment is. So the higher your monthly payment, the less affordable the home, the less likely people are to buy it. And so this is where Home Depot has been seeing a slowdown in spending, partially because people are buying less aggressively. In some instances, we're still seeing a booming housing market in a lot of neighborhoods. But I would say the bigger reason for Home Depot is we've been seeing a huge drop in mortgage refinancing. Because now with mortgage rates double where they were not that long ago, people have much less incentive to go out and refinance on their home, even if they have cash equity sitting there, because they don't want to pay that higher monthly mortgage payment. And when people are not doing that cash out refinance, they don't want to now go out and spend money that they have to dig deep to find to do a home improvement. So people are pausing their home improvements. Now, of course, this is where everybody says, oh, this is just a temporary thing. People will want to go back to the expensive grocery stores. People will start shopping at Home Depot as soon as things turn around. But the question is, when will things turn around? Because the Federal Reserve Bank is working to raise interest rates to bring inflation down. And so you would expect that things will turn around as soon as the Fed starts cutting interest rates. Now, a lot of people have opinions as to when the Fed is going to start cutting interest rates, but the reality is, if the Fed starts cutting interest rates soon, that's going to make the inflation problem worse. If the inflation problem gets worse, that's going to hurt the average consumer, regular people, regular Americans. If the Fed has to stay aggressive with interest rates because inflation isn't coming down, which it isn't, it's still extremely high. If the Fed has to continue raising interest rates, that means that we're going to see even more pain in the economy because of the higher interest rates. So yeah, this might be temporary, depending on when the Fed starts cutting interest rates, but that's going to pose the next question, which is, when is the Fed going to start cutting interest rates? If they keep raising interest rates and they keep interest rates high, this temporary problem can become a much bigger problem that people are not anticipating. And this is where now you want to be paying attention to what's happening, because the reality is, yeah, nobody can perfectly predict a market slowdown, a market crash, or a recession, but you can pay attention to what's happening and understand the general trends. And now understand that we're seeing some of these big businesses start to struggle, and that can show more signs of pain in the economy. And from a business perspective, just want to talk about Home Depot for a second, because Home Depot was a big byproduct of the economic boom that we saw over the last few years, the post-pandemic boom. In fact, they made so much money that they were doing huge share buybacks to increase the valuation of their stock. Back in 2022, Home Depot approved a $15 billion stock buyback. Now we're seeing a complete shift in the tone and real just feel that Home Depot has, because in 2022 they were making record-breaking profits and doing record-breaking stock buybacks. Now they're breaking a record for how fast their revenues are dropping, faster than expectations. So pay attention to what's going on with the trends. Pay attention to what's going on in the general economy, and this is where now it pays to pay attention, because you're working to build that financial education. You should be working to build your financial foundation as well. I keep saying 2023 is not the year for you to go out and finance a brand new truck. This is the year for you to get financially smart, because if more opportunities arise, you want to make sure you have the cash and the ability to go out and capitalize on those opportunities that might come your way. We're starting to really see the Federal Reserve Bank get worried. We're seeing ex-Federal Reserve Bank officials stating that the banking crisis that we've been facing, coupled with the higher interest rates, are causing more pain in the economy, but the worries and the fears about our economy go beyond just the banking sector. The higher interest rates by the Federal Reserve Bank right now are clearly hurting the economy.